Hi everyone, my name is Michelle Yap, and in this video, I'll be presenting my valuation analysis of Spotify based on company's Q4 2025 financial result. The goal of this analysis is to evaluate Spotify's financial performance and estimate in the company's intrinsic value using discount cash flow model. As we can see here, Spotify currently share price is approximately $544 per share, while my valuation model estimate an intrinsic value of around $292 per share. This difference suggests that the stock might be currently trading above what the company fundamental might justify based on my financial projection. In this presentation, I will briefly discuss Spotify's business and user growth, reviewing the company's financial performance, and then explain the valuation model used in the analysis. Spotify is a global digital streaming platform founded in 2006 that provide music, podcasts, and the audiobook streaming service. The company generates revenue through two primary segments: premium subscription, where user paid monthly fee for ad-free listening, and advertising revenue from user who access the free version of the platform. A key indicator of Spotify's success in the size and growth of its user base. According to the company's Q4 2025 result, Spotify currently has approximately 751 million monthly active users, including 290 million premium subscribers. Premium subscribers are particularly important because they are generate recurring revenue through subscription payment. Spotify has also focused heavily on improving users' engagement through personalization features such as systematically playlists and AI-powered recommendation tool. These features help the platform maintain strong user retention and continue expanding its global audience. Looking at the valuation summary on the page, we can see that the relation between Spotify current market price and the intrinsic value estimate in this analysis. The current market price is about 554, while the intrinsic value from the discount cash flow model is approximately $292 per share. This implies a potential downside of roughly 47% based on the assumption used in the model. However, valuation outcome can vary depending on assumption about revenue growth, margin, and long-term profitability. So first, the model start with the historical financial data, including revenue, operating income, and net income. This historical number help establish a baseline for projecting Spotify future performance. Looking at the past several years, we can see that Spotify's revenue has grown significantly as the company continue expanding its global user base and increasing premium subscription. Next, I project Spotify's future revenue growth. This projection assumes continued expansion of the platform driven by growth in the premium subscriber, advertising revenue, and the new content areas such as podcasts and audiobooks. The model assumes steady growth as Spotify continues scaling its platform and increasing monetization across its user base. From the project revenue, the model estimate operating income by expect operating margin. Operating margin measures how much profit a company generates from its revenue after accounting for operating expense. Spotify has gradually improved its margin as it scaled its platform and managed costs more efficiently. Next, the model calculates the free cash flow. Free cash flow represents the cash generated by the company after accounting for operating expense and capital investment. It is calculated by adjusting operating income for depreciation and capital expenditures. Free cash flow is the key metrics used in valuation model because it represents the cash that is available to investor. Next step in the model is to determine the discount rate used to calculate present value. This model uses a risk-free rate of about 4.1% and a beta of 1.67 and require the rate of return approximately about 10.9%. This input helps estimate the company's cost of capital and reflects the risk associated with investing in the company. After projecting the future cash flow for several years, the model calculates a terminal value to estimate the company's value beyond the forecast period. This helps capture the long-term value of business after explicit projection period end. Finally, the present value of project cash flow and terminal value are combined estimate the company's total value. After dividing by the number of shares outstanding, the model produces an intrinsic value of approximately $292 per share. This value is significantly lower than the current market price of around 544, suggesting that the market might currently be trading above its estimated intrinsic value based on this model. This section provides additional information about Spotify's stock performance and market metrics. Spotify currently has market capitalization of approximately 94 billions. The forward price to earn ratio is estimated to be 80 to 85, suggesting the investor expects stronger future earning growth. Spotify also has a beta of 1.67, indicating that the stock tend to be more unstable than the overall market. This statistic help investors evaluate how the stock performance relate to other companies in the technology and communication service sector. This section shows Spotify's Q4 2025 shareholder presentation, which provides more detailed financial information about the company's performance. According to the report, Spotify reached 751 million monthly active user and 290 million premium subscriber. Quarterly revenue totaled approximately 4.5 billion euro, while gross margin increased to 33.1%. Operating income reached approximately 701 million euro, reflecting improving profitability as the companies continue to scale its platform. These results indicate that Spotify continues to grow both its user base and its financial performance. The key takeaway from Spotify's Q4 2025 performance highlight continued growth and improved operational efficiency. For the full year of 2025, Spotify report total revenue of approximately 17.19 billion euro, representing around 10% year-over-year growth. Operating income reached approximately 2.2 billion, while free cash flow total about 2.23 billion euro. Spotify is also investing heavily in AI-powered personalization tool and expanding its podcast and audiobook offering, which might create additional long-term growth opportunity. Overall, Spotify remains one of the most influential company in the global digital streaming industry. The company continued to expand its user base while improving profitability and diversifying its platform beyond music. However, based on the discount cash flow valuation used in the analysis, the current market price appear to reflect very optimistic expectation about future growth. Investors should continue monitoring subscribers growth, investing revenue, and operating margin when evaluating Spotify's long-term potential. Thank you for watching this Spotify Q4 2025 valuation analysis.